Hi, everyone, and welcome. Welcome and thanks for joining us today. We'll give it just another minute or two to let folks kind of settle in, but in the meantime, you're in the right place for webinar number 2 in Clarity's 2025 Compliance Series, Beyond HSA Compliance, Trends, Strategies, and What's Next for Benefit Professionals. This session is being brought to you in partnership with our friends at HSA Store, and we're excited to dive into some fresh strategy and trend insights around today's HSAs. We've got a great session ahead, and we'll give it just another minute and go ahead and get started. Get started at around 12:02. I see people still are joining the session. So hold tight and we'll get started shortly. Thanks, everyone. Yeah, just in another few seconds and we'll jump into the content. Okay. All right. So let's go ahead and get started on today's session. So a few introductions. My name is Meredith LaRoe, and I'm the Director of Compliance here at Clarity. If you joined webinar number 1, welcome back. And if this is your first time, we're certainly glad that you're here. My job is to focus on regulatory updates and best practices to ensure our partners and our clients stay on top of the ever-changing compliance landscape. Today, I'm excited to be joined by Joe Giordano, a compliance manager at Healthy Commerce, or some of you may recognize it as HSA Store. Joe, you want to say hello?
Thanks, Meredith. Hello, everyone. It's great to be here. I'm Joe Giordano, compliance manager at Healthy Commerce, which is the parent brand of HSA Store, which helps users maximize their benefits with qualified shopping and education. I've been actively involved in the consumer-directed healthcare industry for a little bit over 6 years, and I'm involved in government and regulatory affairs to ensure that HSA eligibility helps meet the ever-changing consumer needs. So we're looking forward to sharing some timely insights today and hopefully some actionable ideas.
Perfect. Thanks, Joe. So kind of before we dive into the content, let's just get a few housekeeping items out of the way. The session is being recorded and we'll send both the replay and slides to everyone afterwards, so you'll have everything that you need. If you have any questions at any point during the session, please feel free to use the Q&A panel on the right side of your screen. There's a chat section and a Q&A section. Please be sure to put any questions related to content in that Q&A section, and we'll address as many as we can at the end of the session. Any we can't address, we'll be sure to take them back and respond to you as timely as possible. And yes, this webinar is SHRM certified. If you're here for credit, just make sure to stay for the full session. We'll send you instructions for claiming credit after the webinar is complete. So again, if you joined us for webinar number 1, you know that we took a deep dive into the compliance foundations of HSAs. Everything from eligibility and contribution limits to tax rules and the common pitfalls we see when pairing HSAs with plans like FSAs and HRAs. That session was all about helping brokers and HR leaders avoid missteps and stay compliant. If you missed it, no worries. We'll get you a link to watch the recording. But really today, we're taking the conversation to the next level.
That's right, Meredith. Today, we're sort of expanding the lens. So instead of only focusing on what to avoid, we're going to talk a little bit about what to optimize. So we'll shift gears a little bit, talk about HSA trends, employer strategies, and how compliance fits into the overall evolving landscape. So by the end of this session, you'll be able to identify current HSA market trends and adoption patterns, develop engagement strategies to boost HSA participation, learn how to structure HSAs effectively for maximum impact, explore cost-saving models that benefit not only employers but employees, and stay ahead of any regulatory shifts and emerging industry trends. So thank you everyone for being here. And with that, I'll turn it over to Meredith to get us started.
Thanks, Joe. So kind of before we dive into today's updates and compliance trends, let's just quickly get the basics out of the way. Health Savings Account, or HSAs, are tax advantage savings account that help individuals pay for qualified medical expenses. To be eligible, you need to be enrolled in a high deductible health plan, or as we commonly refer to it, an HDHP. HSAs offer a powerful triple tax advantage. You can contribute money tax-free, your money grows tax-free, and you can withdraw it tax-free for qualified expenses. Plus, HSAs are portable, meaning employees keep their funds even if they change jobs. And unlike FSAs, there is no use it or lose it rule. Unused funds roll over year after year.
Those are great points, Meredith. And I think a lot of employees may not fully understand how valuable their HSA is and how versatile it can be. So as you said, it's the only account with a triple tax advantage, which is a feature that you can't even find in an account like a 401k or an IRA.
Yeah, absolutely agree. We definitely want to set a clear foundation before we move into what's changing and what you need to know heading into 2025. So those are great points. Now that we've really covered the basics, let's talk about why HSA compliance is becoming more critical in 2025. As HSAs continue to grow in popularity, we're seeing a rise in regulatory oversight. The IRS is paying much closer attention to HSA contributions and eligibility, and that scrutiny is only expected to increase. It's important to know that while the IRS doesn't typically audit HSAs directly, they do review them as part of a broader personal audit. High net worth individuals, in particular, are more likely to face audits, which makes it even more important to ensure HSA compliance. For employers, improper HSA administration can lead to penalties, and for employees, small mistakes can trigger tax penalties that really can catch them off guard.
Yeah, absolutely. I think one thing worth mentioning is that it can be fairly easy for an employee to misuse their HSA. Technically, they can withdraw the funds for any reason, but if they're not using it for qualified medical expenses, they could be looking at paying income tax on that amount and then additional tax penalties. So, we're going to talk about education a lot today, but really important for employees to know the rules about how they can use their HSA.
Yeah, and really that's where brokers and HR professionals come into play, that education and that engagement. It's not just about offering HSAs, it's about helping employees use them and maximize them correctly. Getting the details right from the start can help prevent headaches down the road for really everyone involved. Before we get into new strategies, let's quickly recap some of the top headaches we covered in our last webinar. First, contribution errors are a big one, either overfunding an HSA or not properly adjusting for mid-year changes like job shifts or coverage changes. Then there's eligibility missteps, like employees who continue contributing after enrolling in Medicare or not realizing their FSA elections may make them temporarily ineligible for HSA contributions. Another major issue is improper use of HSAs. Withdrawing for non-qualified expenses can trigger penalties. And finally, poor documentation. If employees don't track expenses correctly or file the right forms, it can cause tax headaches during audits. These issues highlight why ongoing education and tight compliance processes are critical heading into 2025 and beyond. The good news, these pitfalls really are avoidable with the right strategy. Ongoing employee education, as you're going to see time and time again through this presentation, is really the key, not just during open enrollment, but through the year, especially around mid-year changes. Partnering with a strong, compliant HSA vendor is another critical piece. A good provider will help with accurate reporting, flagging issues early, and in providing employees the tools that they need to be successful. Finally, proactive monitoring, keeping an eye on eligibility changes, contribution limits, and expense tracking can save a lot of time and avoid costly corrections later. By focusing on these areas, employers, brokers, and HR teams can set themselves up for HSA success in 2025 and beyond. But to truly move the needle, we also have to understand the compliance environment we're operating in, because it's evolving fast. To take us deeper into what's changing and why it matters, I'm going to turn the slides over to Joe.
Thank you, Meredith. So in this next section, we'll zoom out a little bit and look at the current compliance landscape and how it's shifting for 2025. So we'll start with a quick compliance refresher and then dive into some key funding models, employer strategies, and some common mistakes that can really trip you up if you're not staying ahead.
So now that
So
we've
let,
covered, oh, sorry.
oh, sorry.
No,
You want me to take
go
it?
ahead. No, yep, go right ahead. Sorry.
Um, Sorry about that. So let's start by grounding ourselves in the basics. So for an individual to be eligible to open or contribute to an HSA, they must be covered by a high deductible health plan or an HDHP on the first day of the month. So the IRS defines that as a qualified plan with a minimum deductible of $1,650 if you have individual coverage and $3,300 if you have family coverage. To be HSA qualified, you can't have any other first dollar coverage. So no other coverage that pays for medical care before the deductible. You cannot be enrolled in Medicare, and you cannot be claimed as a dependent on someone else's tax return. The IRS also sets contribution limits for an HSA each year, which are typically indexed for inflation. So you see those numbers rise a little bit each year. So for 2025, it's $4,300 for individual coverage, $8,550 for family, and individuals 55 or older can make what's called a catch-up contribution. So that's an extra $1,000 on top of that contribution limit. And typically that number does not get indexed for inflation. So that stays pretty much steady each year.
Yeah, and Joe, didn't we get some news about 2026 recently?
We did. I'm glad you brought that up, Meredith. So you may have seen earlier this month, the IRS released contribution limits and HDHP limits for 2026. So that individual HSA contribution limit rises by $100 to $4,400, and that family coverage limit rises by $200 to $8,750. And then again, that catch-up contribution for age 55 and older remains the same. So important to stay on top of that. FSA and HSA compatibility is a big one. A common question we get at HSA store is, can I have an FSA and HSA at the same time? Generally, the answer to that is no. If you have a general healthcare FSA, that would be considered disqualifying coverage, as I mentioned before. But there are some plan types that can be set up that are compatible with an HSA. One being a limited purpose FSA, which covers only dental and vision expenses and no medical. And the other being a post-deductible FSA, which essentially functions as a limited FSA until the participant reaches their deductible, at which it opens up to cover all qualified medical expenses. So there's a lot of compliance considerations there when you're talking about plan design. I think with things like FSA rollovers and FSA grace periods, individuals looking to switch to an HDHP and HSA coverage might run into an issue there. With having those excess FSA funds. So, employers do have the option to convert that to a limited purpose FSA, or the employee would have to wait until those funds are spent or the plan year ends in order to be eligible for the HSA. But again, a lot there regarding FSA and HSA compatibility that employers should be aware of.
Perfect.
So let's talk a little bit about how HSAs are actually funded, and why employee strategy matters. We'll start, of course, with some compliance considerations. So by rule, anyone can contribute to an individual's HSA. There are really no restrictions in that regard. But contributions must be made in cash, so no stock or bond transfers or anything of that sort. And contributions for the year must be made by the April due date of the tax return. So, for example, for 2024, you would have had to make your contributions by April 15th of 2025 because that was the tax filing deadline. And then another important thing to note is that unlike an FSA, employer contributions count against that annual IRS contribution limit. So something for employers to keep in mind when they're structuring their contributions is really being mindful of that limit and being aware that their contributions count against that limit as well. So what are some employer contribution models? So seeding is a big one. Seeding accounts early, which can be a flat amount at the beginning of the year, can really encourage HSA enrollment and HDHP adoption. It's a good strategy because not only does it have tax advantages for the employer, it could also really demonstrate a tangible investment in the employee's health and financial well-being. which can also help with things like retention and encouraging HSA usage. Um, as we'll see later on, employer contributions actually drive increased contributions by the employee as well. Offering matching contributions, so this would be based on how much the individual is contributing themselves and then having the employer match that amount. Other contributions like incentive-based contributions. So some employers tie their HSA contributions to participation in a corporate wellness program. Um, so this is a good incentive because it really keeps health at the top of the mind for the employee, and then can also encourage utilization of their HSA. Employers can offer a pre-tax salary reduction through a Section 125 cafeteria plan for HSAs, and this actually opens up more options in terms of what they can do with contributions, because outside of a cafeteria plan, we have what are called comparability rules. So employers would be more limited there in the options that they could use, because contributions would have to be comparable for employees based on either their employment status or their level of HDHP coverage. So really, employers have more options in terms of contributions inside of a cafeteria plan, because those comparability rules don't apply. So they can end up offering things like wellness-based incentive contributions. One major conversation we're seeing right now is whether or not to, quote unquote, do the minimum to meet compliance as far as contributions go, or offering meaningful matches alongside things like 401ks in order to help employees best manage their future healthcare costs. So the bottom line here is that funding strategy isn't just a finance decision anymore. It's also a compliance and retention conversation too.
All great points, Joe. I did want to mention the April tax deadline. There have been a few instances this year with certain states extending those tax deadlines due to certain issues in their area. So certainly pay attention to individual tax deadlines. Those will from time to time also extend the HSA contribution deadline, but typically speaking, that tax deadline is April 15th of every year. So now, even with the best funding strategies, there is still common compliance mistakes that can trip employers up. One big misstep is really failing to educate on how HSAs work and how they operate. Really, that can lead to underutilization or ineligibility issues. Another is making contributions for employees who aren't actually HSA eligible, which can trigger messy tax corrections if they're not caught and corrected quickly. And of course, excess contributions are a major risk. While employers can sometimes fix these errors, it creates extra administrative burden and possible penalties if not handled properly or timely. So again, proactive communication, proper eligibility checks, and regular monitoring are really key in avoiding these headaches.
Absolutely. Let's dive into some evolving compliance considerations for 2025. So one thing I should mention is that employers really need to be aware of and stay on top of regulatory changes by being proactive and staying informed, especially from trusted sources like the IRS. You can go on their website and you can see any private letter ruling or FAQs or any type of alert that they issue, especially related to these types of accounts. Utilizing benefits consultants for their expertise, and in certain cases, even legal counsel. So HSA regulations are always evolving, even annually with, what we mentioned before with just the contribution limits. So these should be clearly communicated to employees to prevent mistakes like Meredith was talking about, like over contributions, helping to further ensure compliance, and then, as always, helping employees maximize their tax savings. As far as product eligibility, what users are able to purchase with their HSA, we've seen some major legislative and regulatory changes in the recent past. Going back to 2020 during COVID, there was the CARES Act, which made all over-the-counter medications and feminine care products fully eligible with an HSA. We had an IRS letter in 2021 that made personal protective equipment eligible with an HSA. And then even the end of last year, we had an IRS letter that confirmed that over-the-counter contraceptives and male condoms were indeed eligible HSA expenses. So again, it's important to stay on top of these changes and educate employees because as we've seen, product eligibility especially is a huge knowledge gap among HSA users. Letters of medical necessity. This is currently a growing trend within the industry. There's a lot of companies that are advertising different products as HSA eligible and then offering letters of medical necessity to the consumer to purchase them. There has been some, there was an IRS alert addressing this a little bit early in 2024, I think. We don't know if the IRS will opine on it any further. We don't anticipate that. So it could be a challenge for employers and benefits administrators, but really knowing the rules around eligibility and what is a qualified medical expense and what is not can also help your employees navigate the current industry situation as well.
Yeah, and just personally for that, just in the industry, I've seen a huge uptick in weight loss medications like Ozempic and whether they do or do not require a letter of medical necessity. So there are a lot of over-the-counter or non-prescription things that are being provided to participants, and it's really important to stay on top of whether that item is dual purpose, whether it's HSA eligible, does it require a letter of medical necessity, and so forth. So I've definitely seen that trend increase over the past 6 months to a year. So that's a good point.
Right. So obviously in 2025, we have a new presidential administration and a new Congress. So just some predictions of HSAs under the new administration. We do predict it to be a favorable environment. So Devenir actually projects that HSA assets will grow by approximately 15 billion this year to reach $161 billion in total assets. As far as investment account growth rate within HSAs, that actually saw significant growth in 2024. So it was a 56 billion. It was at $56 billion, which was a 21% increase year over year. So if you watch the news, you may know that there's been some volatility in not only the stock market, but the bond market as well. But again, it's projected to grow in 2025 by nearly $10 billion. So a lot of upward shifts projected there. I'll touch a little bit on legislation on the next slide, but we can also see an increase in HSA market participation through legislative acts that would expand access to populations that currently are ineligible to enroll in an HSA. So that's also something to keep in mind. We've seen an explosion in AI technology over the past few years, and really thinking through 2025, how this could translate to HSAs. You could see tools that offer HSA users things like personalized guidance, forecasting tools, and investment suggestions. So, in accordance with some of the educational tools we'll be talking about today, just keep in mind that there could be emerging AI tools that actually help in that regard.
That's great. I mean, just looking at this slide alone, these are just significant numbers trending in the right direction that really speak to the sustained future and feasibility of HSA plans. So I'm encouraged by a lot of this.
I agree. And last but certainly not least, I'm sorry.
Okay, go right ahead.
Just one more there. 2025 tax reconciliation. So the original Trump era tax cuts are expiring at the end of this year. So there's must-pass tax legislation that must be done in Congress. The House version of the tax reconciliation bill was actually released earlier this week, and it actually does contain some of, if not most of the provisions that I'll speak about on the next slide. So there is a lot of HSA related legislation that will potentially be in the final version of that bill. I think there's a long way to go. It still has to go to the Senate, and I think the time frame that has been given is July. But we at least know in the first draft of that bill, there's a lot of HSA related provisions that could change the way that these accounts function.
Awesome. Thanks.
So HSAs do receive a lot of attention in Washington. I would say more so than other consumer-directed healthcare accounts. And if history has been any guide, Republicans have been more favorable towards HSA expansion, which things like increasing contribution limits and expanding HSAs to currently ineligible populations. So with a Republican administration or Republicans controlling both chambers of Congress, it could be a more favorable environment for limited expansion of HSAs. And again, we saw a little hint of that in the tax reconciliation bill. So these were two standalone bills, first introduced last year, and they actually made it out of the Ways and Means Committee, but were never actually voted on the floor, but they did have some momentum. So the first was the HSA Modernization Act, which would have expanded eligibility to veterans, those on tribal care, and those eligible for Medicare Part A, and would also have increased the contribution limits. And the other was the Bipartisan HSA Improvement Act, which would expand HSA eligibility to those under primary care service arrangements, participating in an employer on-site clinic, or covered under spouse's FSA. So again, these are standalone bills that have not passed yet, but most of these provisions actually ended up in the tax reconciliation bill. So Medicare, primary care service arrangements, employer on-site clinics, and covered under spouse's FSA were the provisions that actually made it in. So we could actually see those signed into law if those remain in that bill. There also has been talk of some broader HSA expansion in Congress, things like HSA for all. So HSAs for anyone, regardless of the type of healthcare, the type of health plan they're enrolled in. Things like HOPE accounts, which would be sort of a Roth style HSA. Universal savings accounts which would be a tax-free account that could essentially be used for anything. But these are actually less likely to pass. They're the more expansive HSA type bills are a little bit more partisan, as opposed to what you see there above, which has a little bit more bipartisan support. And then last is the HDHP telehealth safe harbor. So as you may know, there was a COVID era extension that allowed high deductible health plans to cover telehealth at the deductible without disqualifying the individual from contributing to their HSA. That actually expired at the end of last year and has not been renewed. There has been talk in Congress of renewing that bill, and I think there were a few bills introduced that would have done that. But this is actually an HSA related provision that did not end up in tax reconciliation. So more to come there.
Yeah. And just with looking at these changes, while this may have some considerable unintended impacts on other CDH plans like FSAs and HRAs, really expanding HSA eligibility gives more Americans access to those short-term and long-term financial benefits that HSAs offer. So I'm encouraged by a lot of these potential changes to HSA.
So let's switch gears a little bit, talk about HSA market trends and adoption insights. So we'll talk a little bit about employer challenges and needs, HSA user behavior and engagement trends, and the role of personalized education and engagement. So show you a little bit more of a visual on the next slide, but here you can see that 60% of employers say their biggest concern is HSA education, and they want vendors who can help with that education. 60% of employers only provide HSA education during open enrollment, which is really a missed opportunity there. And then with that education, they focus mainly on the tax advantages, which is, pretty basic information. So they're not really telling the whole HSA story. There could be more focus on the investment aspects, products and services they can use their funds on, and then strategies that can be tailored to the individual, whether they're a saver or an investor or, a future retiree. So the bottom line is that, education at OE may not be cutting it. So year-round strategies are really the thing that employers should be doing in order to facilitate HSA engagement.
So really this is
just, oh, sorry.
Go ahead, Joe. No, go right ahead.
I was just going to set it up that this was just a visual of the numbers I was talking about on the last slide, as far as what employers want when it comes to HSA education.
Yeah. I think it's pretty staggering, right? The numbers are pretty clear. Employees strive for more education and engagement really pertaining to HSAs above really all else, which I thought was a surprising statistic, but the numbers don't lie. So this is a great visual representation of that.
So a little bit more about HSA user behavior and engagement trends. HSA users spend approximately 66% of their funds, retaining about 34%. So how can we drive higher funding habits, and why is this beneficial? One thing that I think is important is that HSAs truly are for everyone. So every household buys products that are otherwise eligible with an HSA. So things like feminine care, skin care, pain relief, sunscreen. Users need to know how to leverage their HSAs in order to get these additional savings. The number of unfunded and closed accounts can be lowered, and contributions can be increased. And overall balances can be increased in HSAs through personalized education. So educating employees on HSAs can drive higher contributions, leading to increased balances, even if spending actually remains steady. So despite 70% of Americans living paycheck to paycheck, many fail to use their HSAs for their routine expenses due to lack of awareness. And 78% actually said they're open to learning more about HSAs. So some misconceptions and missed opportunities. Almost half of HSA users mistakenly believe their HSA is use it or lose it. So that's 50% of users who don't really understand one of the defining features of an HSA is that it's a portable account that an employee can use to save for future medical expenses. Many don't know that their HSA can be invested. Again, another great feature, another tax advantage that employees are not aware of and not taking advantage of. So it's no wonder that because of that, 3/4 of non-HSA users said that they can be persuaded with proper education.
Yeah. I just think this continues to guide that narrative that engagement and education will really help employees to maximize their participation and overall satisfaction with HSA plans, for sure. Did you want to go on
Next,
to the next?
next slide,
Jim?
please.
Yeah. Oh, sorry. Sorry about that.
No worries. So these are the results of a consumer survey that we ran here at HSA Store that again shows the importance of education and awareness for the consumer. 85% were not fully aware of product eligibility, and 35% were actually completely unaware. And then we followed up with, now that you know more about eligible expenses, do you plan to adjust your HSA contributions? And 30% actually said they plan to fund more now that they were aware of what was eligible.
Crazy. I mean, living and breathing these plans every day, to me, it's common knowledge what the HSA covers and the types of expenses it covers. So just seeing these statistics was definitely eye-opening in the number of consumers that have that knowledge gap.
Absolutely. Next slide, please. Again, like I said before, HSAs truly are for everyone. So $1,600 is the average yearly spend for household on health products that are HSA eligible. So these eligible consumer staples make a great case for engagement. You see the assortment of product categories there. So with that $1,600 annual spend, a non-HSA user would be leaving $500 in tax savings on the table.
Yeah. Yeah. And I mean, in the last several years, specifically since COVID, I would say, but many more over-the-counter items have been added to the HSA eligibility list. So from a recommendation standpoint, we recommend employees and account holders really refresh their understanding of what's considered eligible, as they may find that what they can spend their tax-free dollars on today wasn't necessarily the case a few years ago. That list is ever-changing and generally speaking is expanding.
That's a great point. And you can see a few of those categories on this list that, pre-COVID were not, at least not fully eligible. So over-the-counter meds, which prior to COVID, you needed an actual doctor's prescription to use your HSA for. And then menstrual care products, which were not eligible at all. So I think that's a great point.
Absolutely.
I'm going to talk a little bit about the role of personalized education and engagement. So personalized guidance improves funding and participation. We've actually launched a brand new learning center at HSA Store that actually guides an HSA user from where they are on their journey, whether they haven't funded their HSA, whether they're a saver, whether they're a spender, whether they're a retiree. It's HSA education that meets the consumer where they are, either in their life or their career. How can we increase contributions based on each user's unique needs? So helping users understand what they can use their funds for. As we've seen, this help drives increased contributions. Helping users understand that HSA funding does not always have to be upfront. I think that's a big one. So as long as your HSA was established, any qualified expenses you may have incurred during that time, you can technically reimburse yourself at any time. So one strategy that HSA users can use is to not fund their account upfront, incur expenses, and then later on when they're in need of that money to fund the account and reimburse themselves, and they would get those tax savings.
Yeah, and I personally do this. I had a very large chiropractic bill several years ago. I've had an HSA for many years, and I continue to reimburse myself for that large bill that I've had. So it definitely works, and it's definitely a great strategy to help with those spenders.
Yeah, and then engagement strategies lower unfunded and closed accounts. Just to reiterate, every household is buying eligible products. Personalized engagement strategies help increase account education and utilization. They help reduce the number of unfunded accounts and those that get closed due to inactivity. And then engaged users are also more confident because they know more about their benefits and will continue to use them. So this here is just a snapshot of the HSA Learning Store, the HSA Store Learning Center I mentioned earlier, where users can go and have a tailored educational experience based on where they are, and they even can receive rewards for completing lessons. So a really engaging educational experience.
Yeah, and as we'll talk about, I mean, HSAs really are a solution for everyone, and having tools like this to guide individual consumers down their desired path and that speak to their specific goals really helps them provide maximal value and again, overall satisfaction in these benefits. So it's a great tool to have.
So a lot of information here, but if you just scan this slide here for keywords, you'll see how engagement, knowledge, and ongoing messaging are vitally important. Engaging employees ongoing about their health and their HSA, especially young users, will increase their comfort, interest, and use of an HSA and all of its benefits.
Great. Thank you. Thank you, Joe. That was super insightful information. So, I mean, really, as you can see, the data is clear. Awareness is a major hurdle. Even though most employees want to learn about HSAs, they're not often getting the right information at the right time in the right way. So really that's where employers and employer strategy comes in. So let's shift gears and talk about what employers can do to close those gaps, not just with education, but with smart plan designs, contribution, and long-term strategies. So now that we've seen just how much confusion and missed opportunity exists around HSAs, again, let's shift gears and talk strategy, and specifically what employers can do to change the game. Employers have a real influence here. You decide how HSAs are positioned, how much support employees receive, and how easy it is for them to engage. And when really that strategy is intentional, when education is proactive, contributions are thoughtful, and messaging is ongoing, participation doesn't just improve, it really transforms. And we've seen this time and time again. HSAs become more than a benefit option. They become a financial tool for employees, and employees actually understand how to use them. That's where the real value starts to show up for both the workforce and really for the bottom line.
Yeah, and I think that last bullet point there is a good one. HSAs are underutilized when left to employees alone. I can personally attest to that. Before having worked in this industry and really knowing about anything about HSAs, I had one, but I got those 10 minutes at a benefits fair presentation and nothing else. And I think I tried to use my HSA card once at a doctor's office and it didn't go through, and I never used it again until I actually worked in this industry. So
Yeah. That's tough. Once that first denial comes through, you're very hesitant to use
yeah,
it again,
very
right? And
discouraging.
yeah, exactly. You're like, this is worthless. So definitely engagement is key for sure. So One of the most effective levers employers can pull is seed contributions. When employers put even a modest amount into the HSA, employees are far more likely to contribute on their own, and we've seen this time and time again. It reduces employee fear around switching to a high deductible health plan and shows that the employer is invested in their financial well-being. It's a win-win for engagement, participation, and really eventual cost savings.
Yeah, I think a lot of employees may be scared when they see those high deductible health plan numbers, but just knowing that their employee is there to help offset some of those out-of-pocket costs, I think can go a long way.
Yeah, I mean, really, an employer offering HSA seed money is really a great way to increase enrollment in the HSA paired with that HDHP. This can be advantageous to the employer because the HDHP typically has lower premiums, as we all know, than really a traditional copay plan, with employers typically picking up the majority of that premium cost. This would result in greater savings by the employer and also encourages consumerism among employees, while also helping them build a nest egg through their HSA. For example, and if an employer is saving $100 a month, let's say, per employee that enrolls in an HDHP, why not take 25 or 50 of those saved dollars and help contribute to the HSA as seed money? So most employers, as we've noted, only educate employees on HSAs during open enrollment. We feel that that's not enough. HSA education needs to be ongoing and it needs to be practical. It needs to really be tied to real life. Remind employees that they can use HSA for everyday items. Reinforce that funding isn't all or nothing. They can contribute after an expense and get reimbursed later. Education and continued education demystifies the HSA and really unlocks participation.
Yeah, I love that you use that word demystify. I think a strategy we've seen that could be successful is something like a quarterly newsletter or an quarterly email with just different facts and tips about maximizing your HSA. Again, those touch points and ongoing education that go just beyond open enrollment can go a long way to help keep employees engaged in their HSA.
Yeah, I agree. So really, when structured well, HSAs don't just benefit employees, they ultimately will save employers money. Moving to a high deductible health plan, again, reduces those employer premiums. Payroll HSA contributions are pre-tax, saving an estimated of 7.65% in employment taxes for both the employer and the employee. And that's before you even count long-term benefits of tax-free savings and investments.
So translation, better, more education results in higher contributions, which results in greater tax savings for both the employer and the employee. And just to note, employees actually can change their HSA payroll contributions at any time. So sometimes they just need to be reminded on why it's beneficial to contribute as much as possible to their HSA.
Absolutely. So, really, one misconception we often see or often hear kind of in the market is that HSAs compete with 401ks. They don't. HSAs are actually a perfect complement to 401ks. You can use them now or save for later, and really the tax treatment in HSAs is unmatched. That makes HSAs especially valuable for employees who are already contributing to retirement accounts and really looking for ways to offset rising healthcare costs.
Yeah, so in some ways, an HSA is better than a 401k since there's that triple tax advantage. So I'm not suggesting a replacement as a retirement vehicle, but as noted above, a complement.
Perfect. And HSAs aren't a one-size-fits-all solution. They do work for everyone, but it's not one-size-fits-all. While HSAs may seemingly work better for younger, educated, or tech-focused workforces, especially those that are comfortable managing finances and investment decisions, they can and do work for less ideal groups. And there are strategies really to make HSA, HSAs work for everyone. So let's really dive into that next. For workforce Courses where HSAs aren't naturally intuitive, maybe older demographics, higher healthcare needs, employers can still move the needle, incentivize contributions, offer real life examples, walk employees through the investment side with tools or demos. Consider a second chance enrollment or education push mid year when healthcare utilization has hit and is increasing.
Yeah, and you can also remind employees that after they turn 65, they can actually use their HSA for anything, not just qualified medical expenses. They would pay normal income tax on that, but they wouldn't be hit with that extra tax penalty for not using it on a qualified medical expense. So this could be attractive to some of the older populations.
Yeah, and it certainly is, for sure. So it's important to remember that not every HSA holder is going to be an investor. So we can't exclusively, when we speak, focus on the amazing investment capabilities that HSA offers. I think in general, there's about an 8%, about 8% of account holders actually invest. So we also really need to understand and focus on why this is a great experience for savers and spenders as well. And I think this is what this slide demonstrates, right? I think an HSA can work well for really these three pillars of individuals. We call them savers, spenders, and investors. So for savers, their HSAs offer high yield savings accounts and low risk investment options. For those that are really looking to spend their HSA dollars, there's great sites like hsastore.com where you can shop a wide variety of HSA eligible products with ease. Debit cards are offered to use your HSA funds instantly with a simple swipe. And mobile applications to submit claims or check balances on the go is definitely a plus. Benefits of the HSA for spenders is really tax-free savings. The funds are portable, and again, a wide range of qualified expenses. And if you're in the investment category, there's real life investments offer real life tradings of stocks, ETFs, fractional trading, and auto transfer to investments. So really, the key here is proper HSA administration and education will help all three of these pillars of individuals really achieve their ultimate goals. And then let's quickly examine how HSAs work in retirement. When an employee retires, they can continue using HSA funds for qualified medical expenses tax-free as they would have as an active employee. However, if they withdraw funds for non-medical purposes after age 65, they will just owe income tax but won't face any additional penalties. It's, again, crucial, and as a reminder, that retirees properly report distributions on Form 1099 SA and keep records of their expenses in case of IRS audit. So if you're an employer or advising one, here's kind of where to start, right? Offer a seed contribution. It builds momentum. Go above and beyond open enrollment. Make HSAs part of the ongoing conversation. Encourage payroll contributions. They save money for everyone ultimately. And really tailor your messaging to the people. One size messaging does not fit all employees. As we hopefully demonstrated, HSAs are powerful, but only when employees understand and use them. And that's really where you come in and can be leveraged. So as we wrap up today's session, let's discuss the importance of working with a compliant HSA provider and take a look at upcoming HSA trends and HSA compliance. Ensuring proper administration of HSAs is critical for both employees and employers. Choosing the right HSA provider is essential for maintaining compliance and ensuring a smooth experience for employees. A reliable provider will help employers and employees adhere to IRS rules, provide necessary tax forms, and offer education and HSA best practices. Employers should seek out providers with strong compliance expertise, user-friendly technology, and seamless integration with payroll and benefit platforms. So before we wrap up, I want to thank you all for attending today's webinar. We appreciate your time and the questions that you've been asking. Before we move into those questions, here are our final few housekeeping reminders. First, we will be emailing all attendees a link to the recording along with any resources and details about the rest of our compliance series. So keep an eye on your inbox for that follow-up. For SHRM certified HR professionals, you'll receive an email after the session with details on how to claim your SHRM PDC credit. And with that, let's dive into some questions. Just got to get to the question box. So do you see any in there?
So I do see, I guess we could start with this one. So says, regarding HSA reimbursement, can you reimburse yourself if you had a medical expense from 10 years ago? If so, do I need any documents other than the receipts? So the answer to that is technically yes, if your HSA was actually established at the time. If it was prior to your HSA being established, you wouldn't be able to reimburse yourself from it. And the receipt, as long as it's an itemized receipt that clearly shows that the amount that you paid was for a qualified medical expense, then yes, you can. And actually, shameless plug here, we have on HSA Store what's called the HSA expense dashboard that allows you to store your receipts from eligible purchases that you may have made elsewhere also, so that when the time comes to reimburse yourself, you have all your receipts in one space.
Yep, perfect. So another question I see here, are CBD and or THC products available to purchase with HSA dollars? The answer to that is no. They're not federally recognized, and they're still illegal on a federal level. So no, the answer to that is no. If you have an HSA but no longer enrolled in an HDHP, can you still invest those dollars? Absolutely. So if you have the cash threshold and the threshold needed to invest, typically that's $1,000 to $2,000. You can still invest those dollars. And then the second question follow-up to that is, how much do I need in an HSA to start investing? That is dependent on the bank. It's typically somewhere between $1,000 and $2,000, but your individual bank or third party can advise you. There's a few questions here, Joe, about tailored communications and flyers for facilitating for investors, spenders, and other types of user behaviors. Do you want to speak to that a little bit on the HSA Store? I think there was a slide here in the presentation about that.
Sorry, which question was that for?
The question is, do you have a flyer on facilitating for investors, spenders, or other types of user behaviors? I think you did focus on that a little bit on the HSA Store in a previous slide. So do you want to speak about that a little bit?
Yeah, so we actually, that was in regards to our learning center, where we have like a dedicated learning journey for each one of those quote unquote HSA personalities. So non-funder, saver, investor, retiree. And then those educational modules are actually tailored to those individuals, where they're at in their life or their career.
And they can just go to hsastore.com for that
That's on
information.
HSA. Correct.
Okay. All right. This is a good question, and I think we'll tackle this one together. Do you see FSA fading away? Is that why there's a push for the HSA?
I don't see that, actually. I think there are two very separate accounts with two separate set of benefits, I guess you can say.
Yeah.
I think the FSA offers things like uniform coverage rule. So for people who know that they have an upcoming medical expense next year, say you do the full contribution because you know you're having a procedure, that full contribution is available to you on day one of the plan year, regardless of how much you've contributed to your FSA. You know, there are some people out there who do utilize a lot of healthcare and may not look at their benefit account as a way to either save or invest, as some people do with their HSA, who actually, want to use those funds by the end of their plan year and plan to do so the next year. So I think it really depends on the type of healthcare consumer you are and the type of health needs you do have. But going back to what I was talking about with legislation, I think some of those bills that would have expanded HSAs to any type of healthcare account, may be detrimental to FSAs, but I don't really see any of those being enacted, and I don't really see FSAs going away anytime soon.
Yeah, I don't see them going away either. I just see HSAs expanding, which may make the HSA more palatable for individuals that weren't eligible to have it before, but I don't see them fading away in any capacity, no.
And again, there's that high deductible health plan requirement. which is not a requirement for FSAs. You just have to qualify for your employer's healthcare coverage. So we are seeing average deductibles sort of rise to that level of high deductible, even though that's just the average. But there are a lot of consumers that may not want to be enrolled in a high deductible health plan that would still have an FSA as a tax-free healthcare option.
Perfect. Okay, I think that wraps up most of our questions. So I want to thank you for joining today's session. And Joe, thanks for joining me. You provided some very insightful information.
Thank you for having me.
Yeah, absolutely. Again, we will email you all the slides in the recording. And for anyone that is getting SHRM credit, we will provide you that information as well after the session. So have a great afternoon, everyone. Thank you.
Thank you.